You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 29th day of April, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. Now that's a private broadcast. Members only, and those taking our 1-week free trial. If you have not taken the 1-week free trial yet, go to mytradingiq.com, and at the very top of the page, there's a link that says 5-day free trial, no credit card required. Click the link, fill out the registration form. Take a moment to make sure you do fill it out properly because it's an automated process. If you don't fill it out properly, we won't get it, and you in turn won't get a free trial. So nobody wins. But if you'll take a minute and fill it out properly, we'll get it, you'll get your free trial, and everybody wins. How cool is that? Now, every day when the live training room ends, take a 30-minute break, and we come back for the afternoon broadcast. This broadcast, 12 noon Eastern. There are a couple of different ways to join the afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down the page to where it says afternoon broadcast. Click that link, complete that 30-second registration form, and you're done. What'll happen going forward, every trading day, you'll get an email about an hour before this broadcast starts. Inside of that email, there's a link. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit there is you have access to the question box so you can ask questions and participate in the discussion. And you don't have that 10 to 15 second lag that you have when you're viewing via YouTube. See, we're simulcasting, if you will. We're streaming on our platform. We're streaming on the YouTube platform. But YouTube stream runs about 15 seconds behind. Also, at 12:45, 12:50, Michael will join us, at which point I will be monitoring the question box in the YouTube channel. But the first 45 minutes, I'm only monitoring the question box on our platform. So you can see why that is the better way. Now, there'll be days you're out of the office, away from the desktop, you still want to join live. And there'll be days when you're busy and can't join live, but you'd like to catch up later. And that's where the YouTube channel comes into play. It's very easy to remember. youtube.com/CFRN. Now, you already have the YouTube part memorized. So really, all you have to memorize is the CFRN part. Now, not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it is a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can literally see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit. You get the idea. Pretty soon, you'll have a pretty good understanding of who we really are. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. And while you're there, be sure to hit that subscribe button and the little bell. This way, anytime we go live, you'll be notified. And it helps our channel with the algorithm. So, it's free. Just click the button. All right, we'll open today with our daily devotional and a word of prayer, as we do each and every day. Then we'll get into the markets. And as I said, about 12:45, 12:50, Michael will join us, give us a recap of what happened in the live training room today. Then we'll go live on the TradingView platform, do some trading for a half an hour. Then I'll wrap things up with our good word for the day. The topic of our devotion, which we started last week, living a changed life, overcoming spiritual warfare. Remember, we're told in Scripture that as we surrender our lives to serving God, to following in the footsteps of Jesus, that we will receive a changed life. Even our minds will be renewed. We'll be given the mind of Christ. But the enemy never goes silently into the night. No. He will fight to the bitter end. Let's talk about warfare in peaceful times. If you aren't coming out of a season of spiritual warfare, then you're likely going into one. Sorry. It's kind of like the hilltop valley thing. Okay? If you're on the mountaintop, all is good. That means you got a valley up ahead. So get ready. And if you're going through a valley right now, fear not. Because as you come out of that valley, you'll have another mountaintop experience. Yes, that makes life a little bit of a roller coaster. And many of us spend most of our lives trying to flatten out that curve until we finally succeed. And the machine attached to our bedside goes beep. Learn to accept life for what it is. There's successes, there's failures, there's blessings, good days and bad days, good days and good weeks, months, years. You get the idea. So again, if you aren't coming out of a spiritual warfare, you're likely getting ready to go into one. What you do during the peaceful times, during the mountaintop experience, will drastically affect how you battle in the valley. These forces overhead, we already talked about the fact that the weapons we fight with are not the weapons of this world. Spiritual authorities in high places. Remember who for this season is the Prince of the Air. And that's where the battles take place. For your soul. So, during the peaceful time, study scripture, stay prayerful, and find community that points you to God's word when you're having trouble hearing his voice. Don't wait until you need it to prepare for it. Galatians 6:9 is our scripture for today. Let us not become weary in well-doing. Continue to draw close to God in times of war and peace. Lean into a continued intimacy with God, a continued passion for being in his word, and continue to learn and share the word of God with others. Don't let the bitterness from battle steal the peace God has for you and the joy in your journey. In times of peace, you get to spend uninterrupted time with Jesus and sit with him and love him for who he is, not just what he can do for you. Once you fully turn off the demands of this world, you can deepen your intimacy and grow in your relationship with him. As you spend time with him without expectations, you can begin to change your expectations of him. When you can depend on God during times of peace, reminds you of exactly who he is during times of warfare. Jesus promises us that if you are in this world, you will have trouble. But we can take heart in the knowledge that Jesus came to overcome the world. If you prepare in seasons of peace, you will be battle ready when the war comes. God warns us that tomorrow isn't guaranteed. So remind yourself daily to put on the whole armor of Christ, whether in battle or not. When you stay in a continued state of readiness, entirely dependent upon him, you're prepared no matter what. Join me in a word of prayer. Heavenly Father, as we come before you today, we're thankful for the encouragement found in Galatians 6:9, where we are urged to not grow weary in doing good. Lord, we confess that at times we may become discouraged or tired in our effort to live according to your will. Grant us, Lord, the strength and perseverance to continue in doing good, even when we face challenges or obstacles along the way. Help us to remain steadfast in our faith, trusting in your promises and your faithfulness to sustain us. Lord, we pray for your grace to abound in our lives, enabling us to sow seeds of kindness, love, and compassion wherever we go. May we never tire of serving others and seeking to be a blessing to those around us. Give us, Lord, a vision of the harvest that awaits us, knowing that in due season we will reap a harvest of blessings if we do not give up. Help us to keep our eyes fixed on you, author and perfecter of our faith, and to press on towards the goal for which you have called us heavenward in Christ Jesus. And thank you, Lord, for your promise to be with us always, even to the end of the age. May your presence and your strength sustain us as we continue to walk in obedience to your will. It's in Jesus' name we believe and pray. Everybody said, amen. Amen. And happy Monday. Let me give you the numbers from around the world. Start here in the U.S. with cash markets, indices as they're called. Currently the Dow is up 88 points. The NASDAQ is up 52. S&P 500 is up 15. Russell 2000 up 14. No movers, no shakers in the whole bunch. And not unusual as we head into a Fed meeting. Crude oil down 91 cents, trading 82.94 last. That's a drop of a little over 1%. Gold up $5.70, trading 23.52.30 last. Silver up a dime, trading 27.64 last. In the Asian markets at the close, the Nikkei posted a gain of 306 points, almost 1%. Shanghai rose 24, again, almost 1%. The Hang Seng gained 95. And in the European markets at the close, FTSE posted a gain of 7 points. The DAX dropped 42 points. CAC fell 23 points. Some pretty flat, quiet, sideways trade around the globe. And as we go to my charts, you'll see it. So that gave us a green day in Asia. It was a mixed day for the UK. And so far, it is a green Radio Monday here in the US of A. Not a big, not a big green Radio Monday, but color's definitely green, not red. So we'll see what happens between now and the end of the broadcast. A couple of brief articles worth sharing. Now, these flat markets I spoke about, a lot of it has to do with a lack of conviction, or better yet, a lack of understanding. Federal Reserve officials face a lot of questions as they convene for their two-day policy meeting this week. And investors are hoping Chair Jerome Powell will provide some answers. I don't know why, because he already promised us 3 rate cuts starting in June. And, well, we don't foresee that happening, do we? Or do we? Has the cooling of inflation really stalled? I don't know. Have you been to the grocery store lately? Gas pump? Has the Fed's outlook on that cooling shifted? And if so, what does that mean for any hope of interest rate cuts in 2024? Investors are confused, offering a cacophony of views in the lead up to the Fed's deliberations in Washington. While some say nothing has changed, others say everything has changed. And there's lots of voices in the middle. Inflation has stalled to some degree, said Wilbur Stith, bond portfolio manager for Wilmington Trust. Question is, will it remain stalled over the course of 2024? Now, stalled inflation, is that a good thing? Well, it's better than rising inflation. So prices are decades high and are stuck there. So I'm not going to put a mark in the win column for that. Traders have been pushing back expectations for the timing of rate cuts as talk shifts from when the Fed will start cutting rates to whether the Fed will cut rates at any point this year. There was a time this year when markets had bet on 6 cuts starting in March. That slipped to June, then July. Now they're pricing in just a 45% chance of a first rate cut in September. Virtually no one is betting that any action will be taken at this week's meetings. Don't get too comfortable. Fed is widely expected to hold rates steady, keeping them at a 23-year high. I may have mentioned this a year ago. You don't heal a fragile economy by increasing interest rates. I mean, it could lead to interest rates being at a 23-year high if you did that. But Stith says there's still a lot of time left in 2024. While it's not going to be 6 rate cuts, I could still see them trying to do something to get the ball rolling in terms of a rate cut this year. Yeah, how about one right before the election? That's a conspiracy for another day. Not all Fed watchers are as worried about hotter inflation. Luke Tilley at Wilmington Trust said his outlook has not really changed. The housing component of inflation is what's really keeping inflation elevated. That's still slowing on a year-over-year basis. I do not think progress on inflation has installed. And that's what threw me, said Tilly. He still believes the Fed's preferred inflation gauge, the Personal Consumption Expenditures Index, will continue dropping enough for the central bank to begin cutting rates by the middle of the year. Well, let's all hope he's right. All right, moving on to other news. Crypto company Tether has invested $200 million in BlackRock Neurotech, taking a majority stake in the U.S. brain implant company. Tether issued this statement today. You heard me right. This is a company that is going to implant a chip in your brain if you let them. BlackRock Neurotech makes brain-to-computer interfaces, including neural implants, which can allow people to control computers and prosthetic arms without moving. It has no relation to the asset manager, BlackRock. I'm sure it doesn't. The deal, which closed on Friday after several months of due diligence, values BlackRock Neurotech at around $350 million, making Tether its largest shareholder. The $200 million from Tether will primarily fund the commercialization and rollout of BlackRock Neurotech's technology, which has been used with more than 40 individuals. In recent years, various device companies, including Elon Musk's Neuralink, have begun testing brain implants in humans. Tether issues a dollar-pegged cryptocurrency, which has grown rapidly in recent years, hitting $100 billion in circulation in March. It says that the tokens are backed up by dollar-denominated reserves. Tether has made approximately $1.7 billion in venture capital investments to date, using funding from its profits while leaving the reserves untouched. Tether invests in sectors including sustainable energy, artificial intelligence, and peer-to-peer technology. The arm, which invested in BlackRock Neurotech, is called Tether Evo and is dedicated to propelling humanity into a future where technology and human capabilities merge in unprecedented ways. And everybody said, 666. I didn't say that. You know me better than that, right? All right. Yeah, I agree with you, Ricardo. Not my brain, neither. Not my arm, not my hand, not my brain, not my forehead. I'm going to pass. Arizona passes. All right. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Now, I go low and slow on all this every day, but I'm going to pick up the pace today. We are now in week 300. And over the last 300 weeks, we've issued over 15,600 individual handcrafted alerts. Valerie did this recap this morning at 6:30 a.m. Eastern. I don't know that much has changed because the markets are so flat and sideways. But at the time she did the recap, there had been a total of 12 alerts issued. Still waiting on the outcome of 8. We had 4 actionable alerts, of which so far 0 has been stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, again, This is a big birthday for Logic 247, week 300. But long before we had Logic 247, we had the CTAs, the concierge trade alerts. They're a little bit different in a few different ways. With the logic alerts, you've got an entry price, an initial target designed to help you get your goal for the day, and then additional targets that come from me looking left to spot potential obstacles to the trade, and then a final trade to target, which is always the weekly trading zone above or below, depending upon if it's a long or a short. Okay. Now, the CTAs are simply getting a long and a short target, because the purpose of the alerts is to help you to become self-sufficient. If you want to learn how to trade for a living, that'll never happen as long as you're waiting on someone else to tell you when to get in and when to get out. The dog just won't. You've got to learn to read the chart and understand what it's telling you. So you start with the logic alerts. Now, they're not created so you can just trade them and don't have to worry about learning how to trade. No, they're an educational tool. Every time a logic alert comes out, you should go to the 30-minute chart of that market and where the entry price is, you should draw a horizontal line. Initial target, draw another line. Potential resistance or potential support, depending on if it's long or short, draw another line. At every target, draw a line. Right up to the zone above or the zone below. If you will do this exercise faithfully, within a couple weeks, you will be able to look at a chart of anything, futures, stocks, crypto, Forex, ETF, and instinctively know what the next high probability move is. Now, I just said in the Logic 247 channel, there's over 15,600 individual handcrafted alerts. Best work, all trend trades, every one of them. But yet we've still averaged 20% or less on a weekly basis getting stopped out. The only holy grail in trading is learning how to trade. And getting stopped out is as much a part of trading as breathing is a part of life. Professional traders waste no time and no energy trying to figure out how to not get stopped out. They simply look for the next low risk, high probability opportunity. And if it gets stopped out, and based on what we've done over the last 300 weeks, we know that our best work is going to result in 20% of the alerts being stopped out, 20% or less, because there's factors in the market we have no control over. In fact, we have control over very few things, but they're the key things. When we enter, how much we risk, how big is your stop loss, and when you get out. That's all you control. You have no control over all the tens of thousands of other traders around the world, big or small. You have no control. But yet, continue to follow these slick emails that lead you to these slick websites. I promise you the world, drain your pocketbook, and deliver you diddly squat. Stop the madness. Learn how to trade. When this report comes out each evening, now you're stepping up from logic, okay? This is the next step up in your learning process. Go to whatever markets you actually trade and make a note where price is at the time the report comes out. It'll always be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Price gets above the 30-minute BBC. That's the green line you'll see on my charts. Stands for bull-bear cross. When price crosses above it, we're bullish, anticipating higher prices. When price crosses below it, we're bearish, anticipating lower prices. Now, that's relative to whatever time frame you put the BBC on. For the purpose of the alerts, it's always the 30-minute chart. Now, price above the 30-minute BBC, trying to get to the long target. Below the 30-minute BBC, trying to reach the short target. Really simple. With the CTAs, you start learning to look left yourself, to spot the potential obstacles. Previous swing highs or swing lows that can become current resistance or support. And you'll learn how price behaves at a weekly trading zone. This is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. Super simple. We've published the zones every week since December 14th of 2009. Almost 15 years. They come out Monday morning at 6:15 a.m. Eastern. And once they're published, carved in stone for the entire week. Just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty easy to reach your goal for the day. Now, the zones you'll see on my charts today are last week's zones because the alerts that go out Sunday night are based on last week's zones. The new zones come out Monday morning at 6:15 a.m. Eastern. So, going forward, any alerts issued will be based on this week's weekly trading zones. It's the same each and every week. All right, let's jump to the daily of the S&P. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, stick charts, and range charts. Why? Has to do with account size. Institutional traders, because of their incredible account size, trade an incredible size. That's what moves price. Our strategy, our indicators are not designed to outsmart the institutions with their infinite resources, but to help you see and understand what the deep pockets are doing so you can do the same thing just long enough, get your goal for the day, then have the discipline, put the mouse away. Green line, BBC, but it's on a daily chart. You put it on any time frame, any tick, any range chart. The concept is the same. If price is above the BBC, the green line, expect higher prices. Once price gets below the green line, expect lower prices. We're at a major inflection point. We finally got the retracement. It's taken a week. We finally pulled back to the BBC. We've spiked it a little bit today. We could spike it even further. Right there where the 62% extension and the trend line cross, that would be resistance times 2. Price could overcome it and make a run at the all-time historic high put in April 1st. Now, if price fails and gets below the black step line, well, then it's got another issue along with the 24% fib retracement and the 50% fib extension, which was the low of Friday. Red and falling has now curled up into blue and climbing. That's bearish. That's bullish. So we know where resistance is overhead. We know where support is below. the various layers of potential support. Okay. This was a week ago Friday, where we attempted to get down to that 38% extension, but ended up, or that 38% retracement, but we ended up closing the day at the 38% fib extension. Short lines are the extensions, the long lines are the retracements. So what happens here today and over the next few days, the Fed announcement, etc., we're going to ultimately end up making a run at the all-time historic high, or we're heading for this 50% fib retracement. Now, in order to get to that 50% fib retracement, there would be an awful lot of obstacles to overcome. There's actually fewer obstacles to make a run at the high. That's how it plays out. As always, we'll simply trade what's in front of us. Now, this is how flat the markets are. Okay? You've had trouble navigating today. Well, it just might not be your fault for once. So give yourself a break. That's about as flat gets. We had a slightly higher gap open last night. Now, it was at, time did I say? 6:10, 10 minutes into the life of that first candle. That's when the CTAs came out. Ten minutes into the life of that candle. Okay. This price came down to the step line, found some support, managed to get above red and falling, turning it into blue and climbing. And then this candle here opened at 51.42 and ran up 4 points to the target. Actually, it ran all the way to 47. So you can add another point if you got out at the exact swing high. Which is pretty hard to do, except by luck or accident. Because you don't know it's a swing high or swing low till after the fact. So that's why I'm measuring it just to the target. The market did find resistance here. Why? Because that's where it's found resistance on Friday. And at this point, we were unable to break Friday's resistance. Pulled back to the BBC, price always reverts to the mean, and the pullback holds more often than it doesn't. Okay? Today, we actually traded a little bit below, quickly reversed, got back above the BBC, ran to the target again. Resistance sends a market looking for support at the BBC, sends us back to the target, and we do take out Friday's high. Resistance sends us to support, and again, we hit the target and trade through it, and then another retracement back to the BBC and another run to the target. But if you step back a little bit and look at it, that's pretty flat. Now, could you draw a trend line down here? Oh, and a trend line up here. Create a little triangle? You could. Is that going to determine the outcome of the trade? No. Why bother? Okay, so we gapped up last night to the zone. Remember, these are last week's zones. New zones came out this morning at 6:15 a.m. Eastern. These CTAs, all alerts went out last night, are based on the previous week's zones. So we run up to the target, pull back to the BBC, get below the BBC, just enough to fill the gap, and then off we go back up to the target again, back to the BBC in the zone, back up to the target again. Russell, here's where we opened. It's like we came within a few ticks of hitting the target on the first attempt, but there was room to get your goal for the day. Price pulls now this resistance. Okay, where's it coming from? Yep. So pull back holds and off we go. We hit the target, back up, hit it again, spike it, pull right back to the target, and make another run, putting in another high. So we got a high, got a higher high. That all looks pretty bullish. Only problem is the step line is on the verge of crossing blue and climbing. The step line crosses blue and climbing. That tells you that a red candle is probably going to develop and take you back to the BC. Price always reverts to the mean. In our case, the mean is green. It's called the BVC. Simply stands for bull bear cross. In Q. Here's where we opened. Got above red and falling. And up to the target. Goal for the day. Retracement back to the BVC. Back to the target and above. And then we just been consolidating sideways now for hours. That is the definition of a flat market. Big candle. It's a 9:30 opening candle. All right, Michael's here. He's going to give us a recap of what happened in the live training room. Then we'll go live on TradingView for 30 minutes. And when he's finished, I'll complete the recap and wrap things up with the good word for the day.
Yes.
Looks good.
All right, here we go. Whew. Good afternoon. Good afternoon, everyone. Happy Monday. All are having a fantastic day. If you have not taken a free trial with us, well, let me say this. Today is Monday, the 29th day of April, 2024. If you have not taken a free trial with us, go here to tradingview.com and click on the purple button right here. When you click on that purple button, you will be sent you won't be sent a confirmation link. You're sent to this page right here, not this one. This page right here. On this page, all that we ask for is your name, your email, and your phone number. All right, down at the bottom, if you have TradingView, give us a TradingView login ID. But if you have a NinjaTrader, give us a NinjaTrader machine ID. Either one of those will allow us to help you set up, allow us to help you set up your charts, so you'll be able to have your indicators indicating in front of you while you're taking the trial. And that is really the best case scenario. I want to check and see who is in here right now. Okay, good. So that's how you take the free trial. Now, results today. Let's go here all the way down to the bottom. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 29th day of April, 2024. We made 34 ticks on the NQ, 3 ticks on the YM, and 4 ticks on the ES. That put us at plus 235 on the morning session. Today it took 29 minutes and 12 trades to get to the goal for the day. That we're up $2,160 with 16 contracts. And we took a total of 16 trades this morning. So on the month now, we're at $10,120. So tomorrow is the last day of the month. The last day of the month, tomorrow. Yeah, so on the month now, we're up $10,120. That's over 21 business days, $481 per contract per morning session. On the year, we're at $33,110, averaging $408 per contract. Now, if you were to quit trading to get your goal for the day, and you would add 1 contract per month, so far this year, if you started in January doing that, you'd be averaging $919 per hour. Quitting when you get the goal for the day, if you did everything exactly I did. Now, if you started with 1 contract, you probably did better than I did, especially today, because I made mistakes on like the first 3 of my trades and I stopped out on all of them. If you had 1 contract on, you might not have had the slippage that I had, and you might have been able to move your orders a little quicker than I was, and you probably wouldn't have had that happen. But anyway, as it is, I did get the goal for the day. with 16 contracts. I started the 21-20 blueprint last January, so now I'm up to my 16th month. So Wednesday we're going to be at 17 contracts. This number had to be 32,000 to get to 17, and so you can see we're well over 32,000. Using the same trades with 16 contracts on, well, they were the same trades with 16 contracts on, we're averaging $5,376 per hour on the year. Okay, that's where it stands with all that stuff. Now let's get into the actual trades. All right. I am kind of curious about this. Here's on this. I'm gonna do this in just a minute. Okay, it hasn't changed all that. The actual trades. Let's start out with the YM. Okay, we didn't have a ton of trades on the different markets today. We had like one Russell, one YM, one ES, and most of the other trades are on the MQ. So with the YM, let's just go find our one little trade. It's not purple. That should be blue. Chris was asking me about that this morning. That should be blue, not purple. And that was our one trade on the YM right there. We ended up getting 3 ticks profit on that one. Now what Dwayne was saying earlier, markets being flat. Well, you can see it here. If we can't get a lot of trades on the 7-tick range, no, it's and we have FOMC coming up. We have a whole bunch of high impact news events coming up this week. Not any day, but we have a whole bunch coming up this week. Starting out with FOMC on Wednesday, first day of May Day. Anyway, there's some more blue arrows in here. This was all during the break. There was one here that was a nice trade. There was one here that was a pretty good trade, and that one didn't put it in a lower swing, so this one here wouldn't have counted. All right, and that brings us all the way over here at a blue arrow since then. That was the YM. Now we'll look at the Russell. The Russell. Yeah, didn't have a lot of trades on that either. There's a break even right there. I believe that was our one trade on the Russell. Was that one break even? It was. You see, I was hugging the weekly trading zone all morning. Weekly trades, and I had trouble getting the zones activated properly anyway. But we had the one trade right there, and then it was hugging the weekly trading zone all morning. It broke away from it in the break here. It had one green arrow here that was just enough to give it a even trade. I don't know what we're going to get over the next half hour when we start doing the live stream in the YouTube, but I think we don't have to stretch it out for the full half hour. I got a lot of things that I got to do today. On the ES, we're back into yesterday, Friday now. The ES was so short. You see the whole thing right here. This is our only trade on the ES, and we picked up 4 ticks on that trade. I was looking for 12, and it did give the whole 12, but I only got 4 out of it with my trailing stop. There's been nothing else that you could take since then. That's it. And the MQ. Of course, the MQ gave us a couple of opportunities, more than everything else, like it always does. And let's see. Let me hit Alt and back on this. Okay. All right, and we'll bring it in view. So we started out here. And I'm trying to bring it down. These trades were happening really fast. Yeah, the one we did in the pre-market, it kind of gapped all over the place. Now it gapped down, went 8 ticks into profit, then it came back up, and it didn't stop me out. And then it went back down, at least 8 ticks into profit, but it was gapping really fast. And so I never got my stop to break even. Mistake number 1. Over here, same thing. Took this. It went about 15 ticks in profit. Didn't get my stop to break even. Mistake number 2. I stopped out on both of those. I was at minus 40 at that point. I end trade right here, and then I got 2 ticks on this, I think. Yeah, I got 2 ticks on that, brought us down to minus 38. Then I got 30 ticks on that, got us down to minus 8. Then I had a break even, and then another stop out right here. This one did not go into profit. So that one put me at minus 28 right there, and I missed that. And here I went from minus 28 to plus 2. So I got 30 there, then I got 12 there to get me to 14. Then I hope I drew them all in. Right here, we got a plus 4 to get me to 18. And then I believe I had 2 more 8-tick trades. I don't know if I drew them in right, though. Yeah, they were. Okay, here for 8 ticks. That got me to plus 26. And then one more for 8 ticks that got me to 34. And that is where we ended it this morning. Let's see, we had right here, we had right here a shorting opportunity right in there that we didn't get. That was during the break. And several longs here that I didn't get during the break. You can see it was given up. Now, all of these longs, all these green arrows here were coming from this one right here, I believe, right? So it was finding all these pivots going back. Actually, it's the latest one. Maybe the latest blue arrow was these pivots, right? Yeah, it's this pivot right here is what these longs are coming from. The latest one. So it was given all these great targets here, and it hit the first one and not quite the third one yet. Right, it's going a little bit sideways since then. But we ended up with plus 34 on the NQ this morning. That was how we ended it. During the break, it had some nice trades right through here. 1, 2, 3. This, if you stuck it out, depending if you got any slippage or not, it would have given you a nice trade. Otherwise, probably might have gotten you a break even. That probably would have been a break even for me. And we haven't had anything since then. Now we have FOMC coming up this week. So I went and looked this morning, everyone. If you go out here to mytrainview.com, look at Econ Calendar under the More button. Look at Econ Calendar, and in here, you can see, not today, but tomorrow, we have Europe has all this high impact stuff come out at 5 o'clock in the morning. All this high impact stuff, big stuff in Europe. So the euro and actually a lot of futures should be moving when that comes out at 5 o'clock in the morning. Okay, just if you're up at that time. We at 9 o'clock have this stuff. It's medium impact. Then at 9:45 we have Chicago PMI coming out. We show that as a medium. It usually moves the market. We have consumer confidence. It's high impact coming out tomorrow at 10 o'clock. That's usually a big deal. And that's going to be it for tomorrow, right? Then we get into Wednesday. We have some high impact stuff coming out on Wednesday, and then Thursday and Friday we have more high impact stuff. But the big thing on Wednesday is going to be the FOMC right here, Fed interest rate decision, high impact there, and then a press conference following it at 4:30. So I suspect the markets are going to prep for that tomorrow. I was thinking they might do something today, but you see that they're not really doing much right now. All right, so yeah, that is it for that. We have a short trade sitting up right here on the NQ. It's not quite there yet. We need a down close to come out of the overbought right here. It should probably give a green arrow on the down close right there. If it gives a down close, it should probably give us a green arrow. Nope, going right into a no trade zone. Right into a no trade zone. So it'll give you a green arrow. It didn't give you anything that you can do right there. So one of the things we looked at on Friday, I actually had a little waiting there and I took it, but this doesn't count toward any total except for mine. I'm just gonna lock in 4 right there, and probably get 4 ticks on it. I'm gonna lock in 8 and probably get 8 ticks on it. And I did. So what we talked about on Friday, we're talking about Mr. Right, we'll go out here and we'll look at it here. They had a blue arrow back here on Friday, and we looked at the options on Friday. Now the options haven't moved all that much, but I think Mr's got earnings coming up, right? Right here, earnings. It's either tomorrow morning or the end of the day today. So we're going to see something happen with Mr. And I suspect it's going to get up to here. Now, on Friday, I had suggested, where is it? Here it is. Yeah, this right here. And this is what I suggested on Friday, the 1500 calls Friday. This is Mr. Right? Yeah, Mr. calls 1500 calls, right? They're down right now. They're down like $11 now. So they're actually cheaper now than they were on Friday. On Friday, we were paying for a little bit more time over the weekend. But we'll see what they turn into. They're the third calls. So they're Wednesday calls, I believe. No, Friday calls. Friday calls, right? I think. Yeah, Friday expiration date. I want to go back out and turn the YouTube on. We were getting some questions on YouTube, and I don't have it running right now. So let me go turn that on and see what happens there. .com/CFRN. YouTube.com/CFRN if you guys are curious. And we're going live over there right now, and I'm looking over there. The comments to load up. There it is. Okay. And Nathan Joseph, you haven't received it. Can't see what you're watching. I'm showing you the screen now. You should be able to see it here, Nathan, and you should have gotten everything this morning in your email. We went over that last week. I actually see you personally last week. I'll send it to you again. Okay, I'll send it to you again. So this is what I'm expecting on Mr. Calls. I drew this in here on Friday. I think that by the end of the week, we might see this up here, is what I'm thinking. By the end of this week, maybe next week. But the calls that I suggested were for next week. I want to take they expire on Friday. I want to take a look at Bitcoin, see Bitcoin this sideways action. That's what it did the last time we were in the same situation before. After we put a new high in, a new all-time high, we got all the sideways junk right over here, and that lasted for a couple weeks. So actually lasted for like a month. So it wouldn't surprise me if this stuff lasts a long time too. I mean, right now it's March 24th. It's a month now. It's been a month now. It wouldn't surprise me. If it's stretched a little longer, watch the NQ ray. We're looking for the down close on the NQ, and this time it's out of the no trade zone. So we'd be looking for a down close. It's got a high here of 91.50. Be selling 86.50 on that. Okay, 4 points. I'm sorry, 87.50. 87.50. 4 points from the top of the bar. 87.50 is what you'd be selling on the NQ right now. Let me go back to just 4 chart here, and there it is. And I just shorted it, and here it is. 87.25 is what I got filled at. Okay, so I only got 1 tick of slip on that. That's not too bad. I do have a 20 tick stop on it. I almost have a 20 tick stop on it. Now I have a 20 tick stop on it, and we're anticipating it's going to get all the way down here to the prior low, right? At 80.25. 80.25. So that's just above my target at 30 ticks. It's 29 ticks away from my entry. And I have a 20 tick stop, so we'll see what happens with it. Okay. Yeah, Nathan, I will send you I'll send you the link for the morning session again. Okay, I'll send it to you personally again. We want to get 8 ticks in profit on this. It's down to 85.25. 85.25. Okay. To bump that stop to break even. This green arrow doesn't mean anything because the blue arrow did not put in a lower swing. So you can ignore the green arrow for right now. And you got to hit 85.25 to bump the stop to break even. You need 8 ticks in profit on this particular one. All right, there it is. So now we can hit break even. And now we're anticipating it's going to get all the way down here to the prior swing low. So I'm going to lock in 8 ticks in profit. And I'm looking for it to give us all 30 right here. Now this is 1 tick below the swing low. 30. So we'll see. We'll see if it starts to run down there. It should go through that. Going by the leg lengths, and leg lengths is Wednesday's lesson plan, but going by the leg lengths, it should go right through that. There, it just did. Okay. And it gave us all 30 ticks there. So that, what is it? 1:06 p.m. That was a perfect trade setup right there. I walked you through the whole thing from the beginning to the end. I told you where I was going to put the order on. I told you when I was going to put the order on. I told you where I was going to put the stop. I told you when I was going to move the stop. I told you what I was using for a target. All the pieces right there. That's all you need to get. 1 time a day. If you can figure out how to do that 1 time a day and do it consistently. If you figure out how to do that 1 time a day and do it consistently, then that's all you need. You know, that right there is $150 a contract, what I just made there, with 16 contracts on. You can do the math. This ended up being nothing here, and this was going right into a weekly trading zone. You don't really want to trade going right into a zone like that. That's in a no trade zone. So it's now 107. Do you guys have anything? Anybody have anything? Rico, we had said Wednesday, right? We're going to try to do something on Wednesday. Okay, and Ian, you should have gotten the link to our meeting that's coming up here in a little while. And Chris should have gotten his link to the meeting that we have coming up. Okay. And there, we're just hitting the ribbon right now. So now we need to down close off the ribbon. We've got a high here of 83.25. We're going to be selling 79.25 now. 79.25. Here's what it looks like. Okay. We'll walk through it again, step by step by step. 79.25 slipped me quite a bit right there. Just slipped me 3 ticks. Okay, so now 8 ticks in profit. We'll want the stop to break even, but the stop should be 20 ticks away. So I just moved it to 20 ticks away. And so right now we're looking for it to give us, it's got to get down to 76.50 right here. I'll bump that stop to break even. It's almost there, almost there. It's going to go right through it. It should, I don't know that it's going to give us all 30 ticks, but we should be able to get our stop to break even on this one. Here in just a second. Just a second. See, the leg lengths are in Wednesday's lesson plan. And I suspect that this leg length might be a little shorter than the last leg length. The pullback wasn't as deep right now. Doesn't look like. But 76.50 is what it's got to get down to for me to hit that stop to break even. And it looks like, did it actually get there? It didn't get down to 77. Okay. So step by step by step. The stop is in place. We're not going to move the stop until we actually hit this. Right? So you just follow the rules. The rules are in place for a reason. The reason is that they've worked for over a decade. And we got 30 ticks on the last one. We just stopped out on this one. So we gave back 20. We got 30 on the last one and stopped out on that. So now, because we had this blue arrow and it did not put in a lower swing, the rules say, do not trade again in that direction until you have a lower swing. So we're done with NQ for now, unless it turns around and gives something on the outside. Which makes me kind of look at what it's doing overall. Okay. So let's take a look at the NQ on the 30-minute. Look at that. It's right on top of the ribbon. The ribbon, the BTC, MA1, everything. Black step line there, all in one big bunch right here. That's going to make for some really messy trading. You know, there's no good way to anticipate the outcome of this right now. I mean, what I can say is this. It did the same thing back here a little while ago, you know, on Friday. And from there, it's done the same thing right here. So if you were going to try to anticipate the outcome based on that information, this is what I would suggest it's going to try to do. Excuse me. This right here. And that would come off of this low right there. Okay. And that would put us, this was not in the right place anymore. That would put us up here somewhere. Now, where's the zone above? The zone above is all the way up there. So we have FOMC coming out. The midpoint between these zones is right here. Now, this is the midpoint between those zones. This is the leg length that it should get up to. This, watch this. I think this is going to work out really nice. This is the pullback level. Right there. Okay. So let's just say it does do all that stuff. So that's going to pull back. This is roughly the midpoint between these two weekly trading zones. So you get a wick that goes through that weekly trading zone, goes up here, then you get a pullback with a wick that goes down to the midpoint between the weekly trading zones. And then this is Okay, I was wrong when I said there's no good way to try to figure out what this is going to do. This is exactly how to figure what this is going to do. And then it puts us right here at the midpoint between those two weekly trading zones. If it's going to go up, that's what I suspect it's going to do. Right now, I don't know if it's going to go up or down. My money would be on up right here. That's what I suspect it's going to do if it's going to go up. Now, the same stuff on the downside, except the downside would look like this. Let me slide this over a little bit. I guess I can't, can I? The downside would look similar, but let's just make the bars a different color. We'll make them white. Okay, or we'll make them red. They're red. What did I just do? Oh, let me make that one black again. Sorry, let me make that one black again. And then I'll make a copy of it, and then we'll make some red bars. Okay. Let me hit paste again. All right. So this is the one that I pasted. Oh no, it's not. This is the one I pasted. Let me click undo. Control Z. Control Z. Control Z. All right. It's not working out the way I wanted it to. Just delete that one. All right, so this, let me just make sure I got the right leg length here. That's good. And that goes from there to there. That's good. All right, and that goes from there to there. That's all good. So now on this one, we'll do copy again, copy. This time we'll paste it over here. And so the way that it would work if it goes the other way would be like that, which goes right down to this weekly trading zone. And copy and paste. And this pullback right here should be to the midpoint between these two weekly trading zones. And then copy and paste. And then that would push it down like this to I don't know where yet. But now let me just change these to be red. And then up. This is depending which direction it goes in. And we're going to know soon enough what direction it's going to go in. These are things you should look for. And this is all based upon just normal price action. This isn't, it'll come out in Wednesday's lesson plan. But normal price action, look, that ends right down here at the weekly trading zone. How perfect is that? So this one ends at the midpoint, and this one ends at the weekly trading zone. It works out perfectly. Anything in between here, I suspect it's going to get in there. It's going to get stuck in there. It's called bugle. It's going to be really messy trading in there. Once it gets outside of there, it should be pretty good trading. Okay, that's what I suspect is going to happen over the next 3 days. That's the end cue. So we'll see how it all pans out. I don't know how it's going to work out. But then hit save, so this actually does get saved. Don, ES is dead. Do I expect it goes lower to the weekly trade zone at 51.32? Let me go look at the ES and we'll do the same analysis. Okay, it's probably very similar, but let me save this right now. Okay, and yeah, test. It was revelry. It's revelry. Remember that? All right. So let's look at the ES. Let's just go there and look at that one for a minute. All right. Let's back it out and see if we got a similar scenario here. It is kind of the same. It's not exactly the same, but it's similar. You're looking at the pullback is right here. The pullback on here got jammed up, then went sideways for today. Last time it went up here, got jammed up, went sideways. Now I'm ignoring this part right here. All right, I'm just working with what we have right here, this piece right here. Okay, but it's very similar. And This is your leg up. All right, so that would come here. Is where your leg up would go from, right there. Okay, and this is your pullback. Just from there down to there. That's your pullback. So when it gets up there, this is what the pullback should look like. And Don, I'm going to answer your question again here in a second, inadvertently, I think. And if you make a copy of that, you paste that. I guess I can paste it 2 more times. Paste, paste. Because I want 2 more down there. Yeah. So this is what this looks like. Going to the end of the week. Okay. And we need 1 copy of this right here. Copy of that. And paste that. And we'll use this right here to go down. So this is what we're looking at. This is what we're looking at on the downside. Right down to that weekly trading zone. That's perfect. And then the pullback is right back to the next weekly trading zone, which is perfect. And the push down gets it just about down to the other one down below it, which is perfect. That's what it looks like with the ES. Okay, so Don, to answer your question, if it's going to go down, the midpoint between these weekly trading zones is right here. So I look for that midpoint at 1530. Okay. Yeah, sure, Ian. That's fine. Okay, so Chris, I can move Chris up to your spot. But yeah, that's fine. Thanks for letting me know and not just leave me hanging there. If you want to swap, if it's an hour long, just can probably swap with you if you want. That's okay. All right, so this is what I suspect is coming up for the ES over the next couple of days. Now we have a lot of high impact news coming up here over the next couple of days, and this is what the bugle looks like here. Right, for these guys. And as we go sideways into this garbage right here, it's going to be hard to trade. I suspect it's going to be hard to trade. We'll see. But again, just trade what's in front of you. Don't try to make anything out of the stuff that's not there. Not that that's a big surprise, but always trade what's in front of you. Right? This is the bigger picture stuff that I think is likely to happen as we get into the rest of the week, the FOMC and all that, the high impact news that we have coming up. If it's going to go up, I think it's going to go up to here. If it's going to go down, I think it's going to go down to right here. The way this works out between the weekly trading zones on the way down is perfect. Now, I don't know where this is the same thing on the upside. Remember on the NQ, it's right up to the midpoint between the weekly trading zones. Look at that. Midpoint falls right in it, right there. So it's basically the same thing as the NQ. If you want bigger picture stuff, that's my interpretation of the bigger picture stuff from right here where I sit. Now, as we go through, Dwayne's going to have the concierge trade alerts and the logic 247 alerts as it's passing through all of these places here. He's going to have places that are good entry points for you to get in. Right now, he's probably not going to have a whole bunch because right here it's all jammed up. So he's probably not going to have much going on right here. Same thing with the NQ. Okay, because it's all jammed up. It's probably not going to be much until the rest to break out of there. But he'll be giving you the logic 247 and the concierge trade alert targets as it passes through all this stuff. Once it starts passing through all that stuff. Now, the markets typically don't stay down. Right? So if they do go down, this is what I'm looking at. This is what I think we're looking at. But they're not going to stay down. I think most people are expecting whatever is coming to the FOMC. All right, so let's get back here and see if we missed anything else. Wow, it's 1:21. I talked for a long time about that stuff. But anyway, it's a big picture thing. Let me go here and see, did anybody have questions that I did not answer in the YouTube? I don't have YouTube open on that one. Let me see if I have YouTube open on this one. Yeah, this is one I got on. Okay. Yeah, so Nathan, you did log in the other way. Okay, so you're in here now, and I will make sure that you get another invitation to the session in the morning. Okay. I will send it to myself right now, and then I will be able to forward it to you. Share, email me the invitation. Okay. It was just sent to me, and I'll send it to you again. All right. That's what I got going on. Right here on the NQ, we want this to pull back down and hit the ribbon. We're getting into all those targets I triggered from this blue arrow right here. Right, this blue arrow right here triggered all those target levels right there, and it hit 3, 5 of them so far. It's headed up to the trading above, it looks like, pretty clearly. Looks like it's headed up that. But we'll see. Could turn around at any time. Could turn around here. Wow. All right, what is that? The NQ I'm still working on. It's way behind, it seems like. All right. So we don't have any more trades here. Does anybody have anything else you want to look at? Anything? Anybody? You can go out and look at other symbols out here. It's if you want. We are doing a TV trade webinar tomorrow afternoon at 3. If you guys want, and you should have all probably gotten an invitation to it if you're, well, you might have gotten an invitation to it, I don't know. I know a lot of invitations went straight to spam or promotions folders, so you might not have gotten them. But a lot of you guys should have already gotten the invitation to it. It's tomorrow at 3 p.m. Okay, where I'm going to go over the TV trade stuff, just TV trade stuff. And I will try to see that that invitation gets sent out to everybody. Everybody in here. This is we're expecting on Mr. Now, what other one are we looking at? We're looking at Mara too, right? Marathon Digital Holdings. That's one we were watching for a while. Most recently, it had a short right here, but on April 17th, it had a long trade way back here. And this has got the short right now. So if we look at options on Mara right now, it's got targets here and here and here. And doing the math from here all the way up to here, I like right in the middle here, in between all those two targets down there at 16. If we crunch this up, what we actually have an inverted shoulder pattern developing here. And this is creating the other shoulder, the right shoulder. It's actually a bigger picture bullish pattern is developing. But the chop that's happening right now, it gave the short right here for the chop. In fact, if we put the bias on this, we can get rid of that short probably. Yep, that's what I thought, because the overall direction is up right here. That's just a pullback against the overall uptrend. That's Mara. So as far as options go with Mara, I would look for it to go down and wait for the next bullish arrow. The next bullish arrow on Mara would probably be a good time to buy calls. I say that because the leg lengths are great. The leg lengths up are really nice. So wherever that bottom starts from, starting from right here, that'd be great. And let's look at how that looks in the bigger picture. If we look way left on that. Crunch it up some more. It's looking way left on this. It comes right over here, perfect, where there's some congestion before. So it's got a woo spot, window of opportunity, a woo spot from here up to here. So that would probably be the better play. I mean, you know, the puts right now, based upon this down arrow, they probably haven't gained any value at all. They probably lost value since that down arrow triggered at 9:30 this morning. But I think I would wait for the next up arrow, because I think the next up arrow is going to give you more ground. I mean, more return. Just my opinion on it. Is Ronnie in here? Ronnie going to buy a spread? He's not watching. He bought a spread this morning based on the stuff that I suggested with the mister. All right, so we hit all 5 of those targets here on the NQ, and we got up to the next weekly trading zone. Who knows? We'll see what it's going to do. I mean, we have a lot of high impact news between now. Well, we have some high impact news. We have enough high impact news between now and Wednesday to make it really move. If you go back, you know, the NQ can move a ton in a given day. Like, you know, all this stuff that I drew in here, it can do all that in a day. Right here. Look at that one big candle. Yeah, from 1530 to 1600. Did that in an hour or half an hour. That one big candle is about the size of this right here. So you could do the whole thing in an hour. Well, to get up to here anyway. This is quite a way up. But just waiting. Do what's in front of you. Outer bands are flat. You're not going to do anything with that. Over here on the YM, we want to pull back down and bounce off the ribbon. We're not there yet. We're at the weekly trading zone here on the NQ. You can't trade that. The ES, if it pulls back, it'll be right inside the zone when it hits the ribbon, if it gets out of the no trade zone. So we really don't have any trades on anything right here. I guess that's where we're going to wrap it up. It is now 1:30. And Ian, you are off the agenda for now. And I will put you back on when you are ready. Okay, you gotta let me know. Tomorrow I'm not gonna have any time, but Wednesday I have one at 2 o'clock, and then Rico and I might have another one, and then Ashley contacted me during the break. I might be meeting with her. Actually, she can't do it on Wednesday, so we'll see. We'll find a time for you. Squeeze you in there. All right, and that's it. So with that, guys, if you have not taken a free trial, I haven't even said this. If you have not taken a free trial, go here to mytradingiq.com and right here, sign up for the free trial. Right, go to mytradingiq.com, the homepage button right there. Click on that purple button. It's going to bring you to this registration page. Just fill out the form. If you have TradingView, give us a TradingView login ID. If you have NinjaTrader, give us a NinjaTrader machine ID. Okay, just fill out the form. That's all you need to do. Do that, and you'll be sent all the information that you need. With instructions on how to download the platform and how to set it up. If you need any help with that, all you need to do is contact us. Contact us at support@cfrn.net or support@mytradingiq.com. Right? Support@cfrn.net or support@mytradingiq.com. Either one of those will work. All right? That is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Lane is taking it back.
Alrighty, recap of the morning session.
Today it took 29 minutes and 12 trades to get to $2,160 with 16 times.
Good job.
Thank you. Thank you, sir.
All right, guys. Back to the NQ where we left off. So we opened last night. Ran right up to the target. That's kind of where we've been stuck. We had this one candle at 9:30 a.m. Eastern. It's the opening candle on Wall Street, which is typically the largest candle of the session. If the exchanges go to 24-hour trading, then that will probably change over time. But we'll see. It's off in the distance a bit. So all we've done is just hung out basically at the long target. No real movement anywhere in either direction. This is definition, picture perfect, print it and frame it, of a flat market. Nothing happening. And sadly, it could be that way till Wednesday when the Fed makes their announcement. So we've covered all the indices. ES, flat. YM, flat. Russell, not so flat. Russell actually made an attempt to go higher. Okay. So got the high of last Thursday. Friday, we were unable to take out Thursday's high. Vertical lines separate today, Monday, Friday, Thursday. Now, the Monday session begins Sunday night at 6 p.m. Eastern. So we had a little gap higher open, and that got filled right here. Okay. Now the step line has crossed, going climbing. It's still pointing up. So I'm going to suggest that you potentially see that as a head. That is a shoulder. Then this thing consolidates a little bit. I have a shoulder here. And be watching for the red candle that will ultimately take us back to the VC, at which point the question becomes, does the pullback hold or not? We know the pullback holds more often than not, but we also know eventually price will trade through the BVC. Okay. Now again, these are last week's zones because all alerts that go out on Sunday night are based on the previous week's zones because the new zones don't come out till Monday morning, 6:15 a.m. Eastern. Once the new zones are published, then any alert, logic or CTA that comes out after that are all based on new weekly trading zones. So that's all the indices, all flat with the exception of the Russell. A little bit of movement there. Let's go to crude. It's down about $1 on the day. This is the open last night. Below the BBC. So basically, now it was 10 minutes into the life of this candle that the CTA targets came out. And without any interruption, we went right to the target. Now notice that the bullish cross from Thursday. This is Friday. This is Thursday. Thursday we had a bullish cross. That's where the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be support. And it certainly was. Bounced us almost to the BC. And then we dropped almost to the target. Then we get on the right side of the street. We get above the BBC. Got price, step line, balloon climbing, BBC. Nothing to do. Just like over here. Nothing to think about except going short. Over here, nothing to think about but going long. Now, that high is that bearish cross. I thought price would have enough bullishness to it, push us through that cross and up to these highs right here, but it did not. Bearish cross leads to an extended move. First time price revisits that area. Bang. Resistance. Resistance sends the market looking for support, which it finds just above target Slow right here. Bounces up to red and falling. Now, if price pulled up to just the step line, that's potential resistance. A retracement to the BBC, that's a high probability resistance. And so we spike the BBC to red and falling. So we had three things. That's resistance times 3. And what that lead to? Lower prices. Down to the target, down to the zone. And see this little doji right here? Now the low of that doji. That's right. See it? That bounces us back up to the BBC resistance. We always expect it to be resistance when we pull up to it until proven otherwise. Like here. We drop to it, we expect support until proven otherwise. Okay? So, we're now below the target, below last week's zone. We have a low right here at 82.50. Got potential support at 82.41. 90 bucks of room to run. And your next support is here, roughly 82.20. And then here, 82 bucks. Got to go back further, find. Oh, and this low that came in on Friday, I'm sure I pointed it out Friday, is based off that bullish cross. Extended move, first time price revisits the area, expect support. That's what we got. So, lots of room to the downside. Let's see where price takes us. Gold. Just where we opened last night, below the BBC. There's red and falling. Nothing to do but go short. Takes you right down to the target and then some. We spike the target. Okay. Now, as we pull up to red and falling, and price starts to drop, now we could just use this candle. This candle opened at 23.45.70. Just call it 23.45. $500 per contract traded down to the target. And then we spike the target by quite a bit. Price pulls back to the VVC, which we expect to be resistance, and it was. That set us down to blue and climbing, which became good support. Got us back above the BBC, and again the perfect stack. Price, step line, blue and climbing, BC. Where do we go? Right to the target. This candle opened at 23.44.5. Let's just call it 23.45. 23.45 to 53. It's $800 per contract traded. Or if you earn the right to trade 10 contracts, it's $8 grand. Simply a function of math. So we get a pull back to blue and climbing. It sends us back up through the target, but we fail to take out that high. That's a sign of weakness. So get below the step line crosses. You see how on the way up, black step lines on the left side of blue and climbing? Right here, that dynamic changes, and boom, price drops. Not only to the BBC, but through it, all the way to the short target. to the tick. We get your bounce back to the BBC. Resistance sends us back down on the target again. Buyers come in. Drives all this out. This was a red candle all the way down. But before the 30 minutes was up, price had made it back to here. So we get above the BBC and red and falling. Go back to the BBC. And then we get a run. That takes us up to the target. Through the previous swing high. We aren't able to take out Friday's high. 1, 2, 3, 4 attempts. Price is most likely heading back to the BBC at this point. Whether it holds or not, determine whether your next trade in gold is long or short. Silver, roll it to July. The N contract, GSIN 24. Here's where we opened last night. Price consolidated along blue and climbing. Then it dropped to the target, through the target. Go look left, you'll find the support. That bounces us back up to the BBC. Resistance, down to blue and climbing support. Take 1, 2, 3 attempts to go higher. It's back below the BBC. We get back above it. And then once we take out those previous swing highs, you only need 2 pennies to get your goal for the day in silver. 27.67 to 63. 6 points. $300 per contract traded. First, it's the short target, twice. The long target, twice. And then again the short target, and then again the long target. Euro, here's the open, price gets above the BBC, we got the perfect stack. We run 2 weekly trading zone, consolidate. Only 3 things happen at a zone when price encounters a zone. 70% of the time will be this consolidation. 20% of the time, rejection. 10% of the time, a slice. So we reach the long target and the bearish cross. Spike that bearish cross a little bit. Then back down we come. And right here, step in. Take us almost back to the long target. Can't quite do it. Price drops below the BBC. Drop just shy of the target, or the weekly zone. We'd have to get below this weekly zone before we start thinking about this short target. And now where are we? Back up at the long target. So on the day, okay, now the pullback to the BBC holds more often than not. This could become a head fake or not, because remember, red and falling, as soon as the step line crossed, we expected a pullback to the BBC. Now that red and falling is turned blue and climbing, okay, now you've got resistance times 2 directly overhead. So price could spike up there this afternoon and get rejected. But on the way back down, it's got to deal with this potential support, this potential support, this, this, this. And then we could drop to the 38. So it's probably going to be a pretty tight, congested, sideways week until the Fed delivers their no news on Wednesday. Now, while we don't expect the Fed to do anything, I suspect the tone of their announcement will be quite bullish. I would suggest that there's a little bit of pressure coming their way from Capitol Hill. Maybe not to, change the rate. I mean, gosh, that would be wrong or illegal, right? Yeah. But to have a dovish tone in your voice or in the words that you write, that'd be a little harder to prove in court. So, to become a member, go to mytradingiq.com. Just smash that buy now button. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have a teacher. They got indicators and oscillators and books and YouTube videos, but the one thing they don't have is someone to actually teach them how to trade. That's why we put such emphasis on the live training room. You not only need to show up every day, you need to ask questions every day, and you need to trade along in your demo account. You're never going to learn how to trade watching somebody else trade. Just like you're not going to learn how to swim watching someone else swim. That's why there's a demo account. You can push buttons to your heart's content, and it won't cost you a dime. It won't make you a dime, but it will get you comfortable at taking action. Perfection in trading, according to Mark Douglas, is simply knowing what to do it, and doing it. We're teaching you in the live training room every morning what to do, how to do it, and when to do it. And you're getting real good at that in your demo account. So you put together 10 consecutive days in a row where you reach your goal in 10 trades or less, then the blueprint, 24/20 blueprint, will give you the green light to go live with one contract. Once you go live, now your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract with the profit you earned in the market. Blueprint will notify you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. Once you get to 10 contracts, 2 points in the S&P is $1,000 a day. Now, there's people out there trying to make $1,000 a day with one contract. Good luck with that. There's a hard way and the simple way. There is no easy way. There is a simple way. Okay? While you're putting together your 10 consecutive days in a row in your demo account, you'll also be working on your blueprint or on your business plan and your trading plan. Very important. Every trader needs both. 9 out of 10 traders don't even know what they are. 24/20 Blueprint is going to walk you through the process of creating your business plan and your trading plan, because those are going to define how you're going to trade. Don't skip that step. If you do, we'll be having this same conversation a year from now or 2 years from now. many more years from now. As a passport holder, you also have access to one-on-one private mentoring, no additional cost, strategy you learn, the indicators you own as a passport holder. They're fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs. You'll also receive the Logic 247 alerts, the Concierge Trade alerts, and you'll be able to attend the members-only workshop every Thursday night. Plus, you'll get the key that opens all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. MyTradingIQ.com. Okay, a good word for the day. We started on Friday talking about the topic of faithfulness. Continue that discussion. 1 Corinthians 4:2. It is required that those who have been given a trust must prove faithful. Faithfulness requires making 100% of your effort 100% of the time. The magazine Insight once published an article by Gary Shear called Strive for Perfection or Else. It contained some alarming facts. The article said if 99.9% was good enough, 103,260 income tax returns would be processed incorrectly that year. 22,000 checks would be deducted from the wrong bank accounts within the next 60 minutes. 12 babies would be given to the wrong parents each day. 2 plane landings daily at O'Hare International Airport would be unsafe. 18,322 pieces of mail would be mishandled within the next hour. 291 pacemaker operations would be performed incorrectly in that year. 880,000 credit cards in circulation would turn out to have incorrect cardholder information on their magnetic strips. 20,000 incorrect medicine prescriptions would be written within that next 12 months, and 107 incorrect medical procedures would be performed by the end of the day. Now, those are pretty sobering statistics. That was based on 99.9%. I'm sure that your internet provider, your web host, promises you 99.9% uptime. But all of the stuff that I just shared, that's if everything works properly 99.9% of the time. It's amazing we even have a world left, is it not? Like I said, pretty sobering statistics, especially if you're one of the people whose life is affected. Here's the bottom line. Only your best should be good enough in any situation. Anything less than that will never be good enough because it reflects your failure to be totally faithful and completely dependable. That's why the Bible says, now it is required that those who have been given a trust must be faithful. With God, faithfulness isn't merely a concept or a suggestion. It's a requirement of all who serve Him. And that includes you and me. And that's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace. I'll see you at the bell. Will I? Guess I will.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.